Rising debt and the lack of business for New York City taxi drivers has fueled a crisis for the city's drivers. But as the New York Times reports, companies like Uber and Lyft aren't entirely to blame. Many drivers were actually the victims of the industry leaders who pushed them into reckless loans while pocketing millions.
Brian Rosenthal wrote the article, and he's an investigative reporter on the Metro desk of the New York Times. He's joining us now. So this is really fascinating.
Yeah,
because
we've been talking about this.
There has been this raging argument about what these ride-sharing companies have done, particularly to the taxis in New York City. But really, all across the entire country, cities are sort of wrestling with what to do with these overpriced medallions and these taxi drivers who can't afford to pay off the medallions. So a lot of people don't understand how this works, right? So explain how taxi drivers get their medallions and how they're able to drive.
So in New York City, if you want to own a cab, you have to buy one of these medallions. They are issued by the city, and the city does sell them at auctions. But you can also get them on the secondary market, and by finding somebody who owns one and is trying to sell it, and then you buy it from them. And once you have that, it's basically a permit that allows you to have your cab on the road.
This was such a powerful report. Anne-Marie and I were talking about it earlier, and I know I read part 2 yesterday. Based on your reporting and your conversations with drivers, detail for our viewers how this process was exploited. Because you mentioned, for example, several mayoral administrations, including Michael Bloomberg's and Rudy Giuliani's, all played a role in exploiting what are mostly immigrants trying to achieve some level of the American dream.
Yeah, I mean, these little tin plates ended up being very valuable. They sold for very high prices, and the city saw that, and they wanted in on the money from those sales, and so they started holding these auctions. They the Taxi Limousine Commission, we found, turned into a cheerleader for the industry that it was supposed to be regulating. And started promoting medallions as better than the stock market or a path to a worry-free retirement. And they didn't look or seem to care about whether the person buying could actually afford the loan that they were signing to make the purchase. They were focused on getting the revenue from the sale.
Wow.
Yeah, in fact, you sort of compare it to the way housing loans were sort of bought and sold right prior to the real estate crash and the bubble.
Yeah, it's the same thing. A lot of the same lenders, actually, and a lot of the same lending practices. A loosening of lending standards, lending money to people with low credit scores or low income that can't afford it, and lending on these terms that are maybe a no down payment, maybe a balloon loan that's going to be up in a few years, that has a favorable rate now, but it's going to cost you a lot later. A lot of these practices that we saw were being used in exactly the same way in this industry.
Brian, and again, our viewers, if they haven't read your reporting, your very powerful reporting in the pages of the New York Times, should understand that there were people who actually flagged this. There were people who actually said, hey, there's a bubble developing here. These prices of medallions have gone from $200,000 to over $1 million, and there are people taking out loans that they cannot afford. And your reporting that you and your colleagues did is going to air on Hulu and FX in June in the new series that's called The Weekly. And we actually have a clip. I want to play that.
I know so many drivers, they kill themselves. But I have a family, I love my family. So I don't want to kill myself. My life is more important for my family. I love my family than medallion.
And Brian, as you know, because it's been reported in the New York Times here, that there are so many taxi drivers, there are a number of taxi drivers, we should say, who have taken their life because of the situation that they've found themselves in. How vulnerable were immigrant communities to these loans from medallion brokers?
They were very vulnerable. I mean, this is a population that is, just taxi drivers in general, 91% of them were not born in the United States. And they came over, they were looking to achieve the American dream, and they were told that the way you do it is by getting into the taxi business and then trying to buy your own medallion and making yourself into a small businessman. And one of the things that we found that was really interesting was that a lot of the people that were actually issuing the loans, especially when the bubble reached its peak, were not banks. They were taxi fleet owners who were giving loans to their own drivers in order for the drivers to be able to buy a medallion. And so, I mean, think about that. That's basically like your boss coming to you with a business opportunity. And these drivers were really trusting of the fleet owners and the brokers, and they didn't realize that those people were making a big profit and were often working with the bank and not telling them.
Yeah, and for a lot of these drivers, the whole idea was, you know, if you get a chance to purchase this medallion, then you make money while you're driving the taxi, but it's a great retirement fund. Like, you don't need to put money away, because at the end, when you're sick and tired of driving, you could just sell the medallion for a profit and then retire nicely. And that's not happening anymore. Prior to this, you know, your reporting, it was Uber and Lyft that was sort of being blamed for the problems that taxi cab drivers are dealing with right now. Do they bear some of the responsibility? Did this sort of, the emergence of this disruptor industry, did it accelerate the problems with the medallion system?
Yes, I mean, no doubt about it. We're not trying to let Uber and Lyft off the hook here. But what we found is that the impact on cab drivers, if you look at actually the per cab revenue, it's only down by about 10% since Uber and Lyft came. I think that's a surprise to a lot of people.
It is a surprise,
and
10%.
Part of the reason, yeah, part of the reason why it's not more is that yellow cabs in New York, 97% of their rides start in the core of Manhattan or at the airports. And those are places where Uber and Lyft are less popular. I mean, the majority of Uber and Lyft rides start in the outer boroughs. So it actually hasn't been as big of a revenue impact as you might think. But the problem was that they were operating on such a thin margin, and the situation was already unsustainable and unstable. So even a small revenue drop like that led to this huge catastrophe.
Sorry, but we both have, this is such a fascinating story. Let me ask you, Brian, just about, you mentioned the owners of fleets that were the ones ultimately, in some cases, providing loans to these vulnerable immigrant drivers and their families. But did your reporting uncover that a lot of these fleet companies are actually themselves owned by immigrants who probably 20 or 30 years ago came to the United States and started driving taxis and built up a fleet? I used to know, for example, in the 70s and 80s, Haitian Americans who started as drivers and ultimately made enough money that they were able to acquire a car and a second car, a third car, and a fourth. And then they started a taxi business where they had drivers doing the jobs much in the same way that they did. Did you find that mostly immigrants own some of these fleets?
Yeah, we did. I mean, a lot of the fleets are situations just like you mentioned. But the biggest fleets actually in the city are fleets that have been around for decades, basically since the beginning of the medallion system. And they've been passed down from generation to generation, and they might now be on the third or fourth generation. And I mean, again, they still, you know, they ultimately came to this country looking for a better life, and, you know, nothing wrong with that, of course. But what we found is that as they got further and further away from the people who actually bought the medallions, they started pursuing riskier and riskier business practices.
All right, Brian, thank you.